as an investor, you're going to have good days and you're going to have bad days. And sometimes the good days will be longer than the bad days, and sometimes the bad days will be longer than the good days. And sometimes the bad days are really long, and that's how we get bad years. And sometimes your bad years will be in a particular asset, and sometimes it'll be your overall portfolio. It's very important, though, to always judge yourself on the performance of your overall portfolio. If you keep that in the green, that means you're making money. And if that goes in the red, regardless of if you have one or two stocks that are just super in the green, it means you're making a loss. At the moment, my local JSE portfolio is performing quite well. We're up 6% in the year to date, so it's not bad. But there is one particular stock that haunts my portfolio. And so far on this stock, I'm down 25,000 rands. And in percentage form, I'm down 50% on that share. And I'm going to tell you today about how I'm losing this 25,000 rands and whether I think it's time to sell or will I continue holding this rotten potato. But before I do that, press subscribe, click on the bell, get notifications so you can hear more about South African stocks from a South African millennial investor. This is Omega and welcome to Money Mondays. So, as I've said, I'm losing 25,000 rands on a particular stock, and it's a headache and it's painful. But I should have known. That's always the sad part in a loss, is that you look at things in hindsight and you're like, I should have actually known that this was not gonna be the greatest investment ever. So the stock that I'm going to be speaking about is a property stock, and South African property is a mixed bag, especially listed property assets. It's a total mixed bag of rot and other things that I won't say, but it's a mixed bag. Opportunity there, but most of the time there's a lot of grief and a lot of pain. So the share I'm going to be speaking about is Indlu Place, and so I'm going to be telling you exactly what's going on with that share price in relation to me. But before I do that, I'm going to just tell you a little bit about my property thesis in relation to South Africa. And then I'm going to tell you about how and why I'm losing this 25,000 rands on this stock. And then in the end, I'm going to tell you whether I'm selling or whether I am holding the stock in perpetuity. So I'm going to read a little bit from my notes just so I can make sure that I'm accurate for you lovely people. So let's get into it. So what's my property thesis for South Africa? It's based on two things. One is that the population is growing. We all know it. South Africa's population has been growing for the last 20 to 30 years, and it's expected to continue growing on average between 1.5% to 2% per year. And all those people are going to need this thing called housing. I don't think there'll ever come a day where people don't live in houses. I just don't think that's ever going to happen. People are going to stay in apartments, houses, somewhere. Humans will need shelter. It's one of the key needs in Maslow's hierarchy of needs. So yeah, I'm sure it is. So shelter is quite important to us. The second part of my thesis is that expropriation without compensation is going to be bad, but it's not going to be that bad, all right? I know a lot of media talk and a lot of political talk and a lot of people within industry speak about how bad expropriation without compensation is going to be. People from banks, the finance sector, insurance sector, property sector, all sorts of sectors complain and cry and whine about expropriation without compensation. Now, I'm not going to give my opinion on that policy. My job as an investor is to navigate the economy and navigate the market. That's my job. And so because I believe it's not going to be as bad as people might say that it is, I think in there'll be some opportunity. It will result, of course, in a lot of uncertainty, and that uncertainty will lead to investors fleeing South African property. A lot of people are going to sell. A lot of people are going to dump their property assets just out of fear that what if the government comes and snatches my property. I don't think it's going to be that bad, though we don't know, but I don't think it's going to be that bad. As long as the ANC remains the way that it is, the way that it's mixed, I think as the economy tanks due to the implementation of that policy, there'll be some policy correction. And I'd like to believe that even before the policy gets implemented and voted on in Parliament and passed fully as legislation and law, I think there'll be a lot of corrections in the various expropriation without compensation documents. So I don't think it's going to be that bad. So there's going to be opportunities to buy some really good property assets at a very cheap price. Unless, of course, a particular other party takes over. Then we really don't know. Now, in the backdrop of that, the population growing and EWC not being that bad, I thought it would be a good time back in 2018 to buy a particular type of assets. Now, there's various ways to invest in property. One, buy a property, lease it out. Buy a property, renovate it, sell it to somebody at the high price. Or turn to the market and perhaps buy a real estate investment trust, which is a company that holds properties, leases them out, collects rent, and then pays the income to investors, i.e. shareholders. So I wanted to be one of those nice shareholders that gets a very sweet dividends from a real estate investment trust. So in 2018, I invested in Indlu Place. Wah, wah, wah. A big mistake. All right, a big mistake. The reason I invested in Indlu Place is because as much as I thought retail property was crap, which it is in South Africa, I didn't see residential being crap. And Indlu Place is a residential REIT. So they buy residential properties, apartments, and lease them out. And as I've said, population growth, people needing a place to stay. I thought, man, this is a good one because I don't want to put a deposit down and pay a mortgage. So I thought it was a good opportunity. Little did I know that the failure and slow demise of other REITs, and of course the drama that happened with Resilience, that would lead to all the REITs just slowly losing value. And all of them have lost value. If you're in Rebosis, I feel even sorrier for you. And Delta Property, oof, that's just another mess. But I'm in Indlu Place, and they've lost a lot of value. I bought the stock when it was about 7 rands a share, and right now it's about 3 rands and some change. And I have suffered for that. I've experienced a 50% drop in the shares price. So that's been pretty painful to experience, but it's part of investing. You can be right about your theses, but the way you express your opinion, you might find yourself pretty much incorrect in that regard. So, am I going to sell my stock or am I going to hold? Before I tell you that, let me just explain the reason why I've lost so much money in this stock. First, I want to say that I believe Indlu Place is a good company, all right? I see them doing well in the future, and I'm not angry at the loss. It's a hard lesson, but one I had to learn. The reason I lost so much is because I broke my own risk management rules, all right? That's the key. I broke my own risk management rules. I know that read like a little apology statement to say that the company is good and that I believe in them before I maybe do a parting shot, but it's just to highlight that the company is a good company. I think their mission is pretty good, to house people. But I broke my own risk management rules. And so what are my risk management rules? When a stock drops in value by 15%, depending on obviously the volatility that stock generally carries and the sector and industry that it's in. But for most of my investments, if they drop below 15% within a particular time period, automatically my stop loss is triggered and I leave that stock and I reassess the position, I reassess my theses, and I find out, is the thesis correct or the thesis wrong? Because sometimes the thesis is correct, like I've said, but the way I have expressed it is wrong. And sometimes the thesis is wrong. So the whole investment itself is just going to be fraught with a lot of loss. So with Indlu Place, I watched the share price drop by 15%. It carried on dropping, and I was like, I'll hold for the long term. Whew, the long term is very long when a stock has lost 30, 40%, 50%. For it to recover is actually going to take a lot out of the South African economy, and it's going to take a lot of market intervention, as in liquidity has to flock back into the market in regards to that stock. And I just don't really see that happening for Indlu Place, as it's an SA REIT with all the other property issues and uncertainty that's going on. So I broke my own risk management rules, and that's what happened. And I held on, and I became what's called a bag holder. Now, if you don't know what a bag holder is, it's a financial slang term. It basically means someone who's holding an asset that is technically valueless or worthless or very low in value after everybody has left that asset. So I'm an Indlu Place bag holder. I'll proudly wear my bag holder status on that. I'll take that loss. I'll take that L. It's just the way that it is for me. So as a bag holder, my choice is, do I let go of the bag? Do I try ditch it and run away as well? Or do I hold on to this bag hoping that there'll be a great payoff one day? Never let your emotions invest for you. And that's one of the rules that I also broke. I had the idea that, no, this thesis is correct, my property thesis is correct, residential is going to carry on growing. No, that's not the way you invest. You do not hold on to an idea. You must be willing to be proven wrong. And on the property thesis, I'm sure that I'm correct, but the way that I expressed it was definitely wrong. There are a few interventions that I should have done in order to prevent the loss, but I didn't. So that's how I lost my money in Indlu Place. I first broke my wrist. Well, first of all, right thesis, wrong expression. SA REITs, everybody knew. Most people knew they were just not a really quality investment. And then I broke my own risk management rules, which is probably one of the biggest crimes you can do to yourself as an investor. And I held on for dear emotion because I wanted to prove my theses correct. Wrong way to invest. That's how I lost that money. Do not make those same mistakes with any stock. So, will I sell or will I hold? I won't keep you waiting. I'm not going to hold the stock. It's time to let go. Indlu Place, I love you. You've been great to me. No, you've been horrible. It's not you, it's me. Truth be told, it is you. It's time for me to let you go and let you be free in the market. I'm sure somebody else needs those shares. And if you want to buy them, go ahead. When I press sell, I hope you're on the other side buying. Do not buy. So I'm going to let go of the stock. I'm going to sell it. It is time to sell. But my reasons for selling, though this might be an opportune time to actually buy a whole lot of Indlu Place's stocks, in hope, of course, that the share price doesn't continue to plummet, going down to like 85 cents or 1 rand or whatever. It's currently at about 3 rands and some change right now. One could hope that the share price is going to grow. It did actually have a nice little turnaround. And not, in fact, let me not say turnaround, but it did have a little bit of growth last year. But I don't foresee the stock returning my capital in the next 3-5 years even. I think it's a closed case for me that it's best to walk away from the stock and look for other opportunities. So why am I selling? I'm selling for a couple of reasons. The first reason I am selling is I want the liquidity. All right, so liquidity basically means money. I want to have money right now in my investment accounts. And to hold on to a stock that is losing me money is A, not good for liquidity, and B, is also not good for psychological morale. I'm very good at keeping my emotions out of my investments, but a 50% knock is something that will affect most of us, no matter how strong we are and no matter how stoic we can be about our investments. So I want the liquidity. I'm trying to predict where the global market is going to go, and that might require me to have some liquidity so I can take advantage of particular opportunities that might actually come up in the global markets. The second reason why I'm selling is I want to take a portion of my little capital that's left and invest it rather in a platform like Easy Properties. So Easy Properties is a what would I call it? It's a property investment facility by easyequities. All right, so great platform for investing in property. Obviously, it's still new. It's just was only launched last year, so it's tested, in terms of the theory and the way that it's worked. But long term, we don't know exactly how it's going to play out if you're somebody who invests in property through easy equities. Through easy properties. But that's something that I want to do because it's going to offer a little bit of liquidity to invest that way and a return as well. So those are the two reasons why I'm selling my Indlu Place stock. It's that I want the liquidity and I want to try an alternative way of investing in property. The bonus reason, of course, is, as I'm sure you can see from the reasons that I've stated in this video, is that it's time to cut the loss. The old saying is, cut your losses and let your winners run. I made a mistake on this one. I didn't cut my loss. Instead, I let that loss run till 50% of the amount of money that I bought those shares for has literally evaporated and it's gone. Today, I attended the pre-market closure discussion, Indlu Place pre-market closure discussion. It was pretty interesting just to hear from the insiders, and I just wasn't convinced of the moves that they were speaking about. For me, it's honestly time to sell. For me, it's time to sell. So I'm out of the stock. So tomorrow, I hope in the morning it doesn't drop even further. I've put in a pending order and it's time to kiss Indlu Place goodbye. So I hope you've learned something from this video about letting your winners run and cutting your losses and understanding why you may lose money in the market. I can certainly say that I've had quite the experience from Indlu Place, and I hope that you guys also learn as well. If you want to hear more about South African stocks, you want to hear more about personal finance, you want to hear more about investing on the Johannesburg Stock Exchange, subscribe to this channel, Money Mondays. Click the bell, get notifications. I release videos once a week, every Wednesday. So guys, subscribe. I'm going to be sharing a whole wealth of information from a retail investor perspective. So if you're a retail investor, meaning non-professional, you'll probably love this channel. Obviously, I do have a background in psychology and I've got a background in finance as well. So I do have a bit of leverage on most people. But however, I'm still what would be classified a retail investor. And I hope that we can invest together and make some good money. But most of all, add value to our markets and to the economy. So thank you for tuning in, guys. See you next week, Wednesday. It's been great.